This is Shelley Craft coming to you live on SNN Live. We're at the Sprott Natural Resource Symposium 2017 here in Vancouver. I'm going to be doing a Wall Street View with Lois James from KC Research. He was a speaker at this conference, and he's the senior investment strategist at KC Research. Lois, welcome to SNN Live.
Thanks, Shelley. Great to be here.
It's good to have you. So let's start out with a brief overview of KC Research and what you do there, and then we'll go from there.
All right, KC Research is an investment publishing business. We specialize in the resource sector, but we have branches in other areas. So I encourage everybody to visit kcresearch.com and find out about what we do. My specialty is really metals and mining. So I'm the guy that goes around and kicks rocks and then picks stocks.
Okay, I like that. So what did you speak on at the conference?
Okay, the topic is what I call the Golden Runway. It's not exclusively about gold, but it kind of comes from the gold space. And here's the thing. There's a conventional wisdom in the sector that when you have a discovery, that's where your 10-baggers are. Little junior resource stocks go up incredibly on the discovery, and then you go in the boring engineering phase. Stocks slump off. It's, doing technical studies. Nobody cares about that. And then the company ramps up again to production. And then who knows what happened? The mine, depletes over time, or they make another discovery, it goes up. You don't know what happens after that. And this is what Doug Casey taught me when I was a little boy, and he sat me on his knee. It's the conventional wisdom. It's what we talk about in this sector. But what nobody had ever done before was quantified, okay, the 10 baggers are in the discovery area. What is this end of the boring phase? What is the increase when you go from engineering studies to production? And I asked around, and nobody had an answer for that. So I started looking, and I have some very bright young people working with me, and we crunched the numbers. And at first, I couldn't believe the results. So I sent them back, and we got twice the sample size. And this may sound incredible, and I honestly would not believe some of these numbers if I hadn't done the work myself. But here's the thing. People assume that when you come out of the boring engineering phase and you go up to production, the gains are modest. It's priced in. Everybody knows who's building a mine. You put out a press release saying you're building a mine. But the reality is the gains are substantial. We have found 105 cases of this. And almost everybody who starts building the mine succeeds. Nobody's going to lend you the money to build a mine if they don't think you can do it. So that's important. The success rate at building your mine is on the order of 95%. Almost everybody who starts out this path does it. And the gains, on average, are about a double. Let me repeat that. You have a 95% chance of succeeding at building your mine. And if you do, the average gain is about 106%. And to my mind, this is amazing. My newsletter, the primary monthly newsletter I write, is called the International Speculator, not the International Sure Thing or Safe Bet. So I never expect these kinds of odds. I understand I'm a big boy and I'm speculating, and I win some and I lose some. And in this space we can win so much that it offsets the losses we take. Rick Rule talks about this all the time. I don't expect to have very high odds at very high gains. And what I have found, looking back over 30 years of history of every case we could find of a first-time mine builder. It doesn't count if you're already in production and you build another mine. It has to be a junior making the transition from basically nothing to production. When you do that, the average gain is about a double. But it gets even better. I honestly wouldn't believe this if I hadn't done the math myself. If you find the top performers, the average of the top 5 in our sample was 764%. So, let me repeat that. The average of the top 5 performers out of the 105 cases of first-time mine builders was 764%. That's on the order of a discovery. Not quite a 10-bagger, but you know what? 7, 8 times my money? That's pretty good, with odds that are phenomenally better than the odds of making a discovery. Discovery is hard. So
what about how conventional wisdom thinks that that's priced into the stock? You know what I mean?
Yeah, I knew. I've talked to Rick about this. When I told Doug about this the first time, he said, well, yeah, but people build mines in bull markets, so bull markets take everything up. Maybe that's it, right? I said, well, no, we've looked back over the last 30 years. And so this includes the terrible times of 2011 to 2015, the crash of 2008, and preceding bears. We found 31 cases in our data set of bear market builders. And some of those lost terribly, but the average was still positive. The average of the 31 bear market builders was still 24% positive gains. So the conventional wisdom was just wrong, and nobody ever did the math before. And I've talked to Rick, I've talked to Doug, I've talked to Bill Bonner, I've talked to Brent Cook, my peers, everybody that I talked to, they all go, no, I never saw anybody do this work before. So it's not my original discovery. The conventional wisdom is that stock prices do go up towards production, but nobody ever put a number on it before. To me, this is phenomenal news. And I'm excited to share this with everybody.
So what you're also saying, by the way, is that the price of the underlying commodity makes no difference.
It does, but what I'm saying is this increase in value is so strong that on average it overcomes the negative. The bear market builders definitely had much smaller gains than the bull market builders. And none of those top 5 were bear market builders. But what I'm saying is if you bet on first-time mine builders and the market turns against you and turns into a bear, the odds are you'll still come out ahead. To me, that's phenomenal. That's like insurance, right?
So what are we in now?
Well, I believe we are in a bull. So this is positive. The average of the bull market builders, not the 31 bear market, the average of the bull market builders was on the order of 160 some percent. I don't have the number off the top of my head, but it was much better than just the mere double. And of course, I like to think that I'm good at spotting the better companies. And my mission right now, and what I'm working on in the newsletter, is honing in on those next top 5 deliverers. And what I love about this is, suppose I fail completely. I don't pick any of the next top 5 winners. I'm still looking at probably at least a double on my money. And that's like the worst case scenario. And
does jurisdiction matter?
We looked at that. No. So one of the top 5 builders was in a country in Africa that had a coup, right? One was in China at the time when it was unknown. One was in BC. So it's all over the place. It's not grade, by the way. It's not net present value, a rational value. Actually, the correlation is negative for both net present value and internal rate of return. For the top performers, didn't matter at all. So I don't want to give away the secret sauce here. We do have a theory about what causes the top performers. We've come up with a way of scoring. It's multiple variables. We've come up with a way of scoring this, and we have found a very strong positive correlation between our scoring system and the top performers. And this is what we are applying now. And so our goal right now is to find those next top 5 performers.
Where did the light go on in your head to come up with this?
I wish I had a great story. I was sitting under the apple tree like Isaac Newton, and the apple fell on my head. The truth is, I was just sitting at my desk, thinking about the markets, thinking about opportunities, and this cartoon that we look at of discovery phase, boring engineering phase, production phase, I looked at that and I realized I didn't know what the number was. Like, what is that ramp up from a construction decision to that first pour, that beautiful gold bar? What happens there? And it occurred to me that I've been in the business 13 years and I didn't know what the answer was. So I looked, and holy camole, I couldn't believe it until I looked again. We've done this research 4 times, and every time we increase the data set, we get a very similar response with a much higher degree of confidence. I encourage everybody, if you're skeptical, come and read what we've done, see our numbers.
Let me stop you. Ladies and gentlemen, let's get his website out there for more information.
Thank you very much. CaseyResearch.com.
Ladies and gentlemen, this Wall Street View was done with Lois James and myself. He's from Casey Research. He's a speaker and the senior investment strategist at Casey Research. I'm Shelley Kraft. This is SNN Live, and we're coming to you live from the Sprott Natural Resource Symposium 2017 here in Vancouver. Lois, thanks for coming on to SNN.
Thank you.